Hello, welcome to this video. This is a video where I'm just going to go through my trade analysis, and I've got a trade on right now, but I'm just going to do a quick top-down analysis on why I took this trade, and so that we can archive it as some journaling. So just going to do a quick month-down analysis. We've got monthly highs and lows. I marked them in red. Monthly highs and lows, pretty easy. We don't mark the current one. Weekly highs and lows, I've marked them out in orange. Okay, and daily highs and lows are marked out in yellow. Let me just turn off this here. Daily highs and lows are marked out in yellow. Okay, and then so what we're going to do is just drop down to a 30-minute chart, and we're just going to do some analysis on what has happened in all of these levels. So, okay, so what we've done in the past couple of days, we've come up, made some new weekly highs, as well as grabbed a previous weekly high. So we're considering this a liquidity grab. Okay, and then after this liquidity grab, I actually did take this trade here. Where is it? Taking this down to this. Take this optimal trade entry, stop loss above here, targeting these lows here. Now I had this overnight, so I took my take profit down here, but this was a good trade, and this happened after a weekly a grab of a weekly high. Okay, but since then we've come down, we've touched on some previous daily lows. Okay, nothing happened from here. I did try and take some trades here. It failed, didn't journal them, but I essentially tried to get an optimal trade entry, and this is where I really need to refine this process. Optimal trade entry here, and it was a no-go. So I need to refine the process, but we're in this trade here, and so what's happened is since then it's come down and it's tapped into these daily lows. This is yellow, so it's tapped into these daily lows, and you can really see from this candlestick, from this big wick down here, that this looks like a liquidity grab, especially with this volume. So we've tapped into the daily lows, and we're coming up. Now, when we look at what's happened, okay, the market moves from liquidity to liquidity. So it grabs, liquidity on the top side, and then uses that liquidity to move to grabs buy side liquidity, uses that liquidity to move down, grab sell side liquidity. So we're expecting the market to oscillate between buy side and sell side liquidity, so understanding that, having a look here, we have come down and see this orange line here. This orange line is from way back here, and this orange line is actually from here, and this is a weekly low. So we come down here, grabbed these weekly lows, created some new lows, but we grabbed this weekly low here. Okay, and if we were to look for an optimal trade entry after we'd created some higher highs, we could have done that here, and that would have been an optimal trade entry. That would have got us up to about here. We came back up, grabbed some weekly highs, and again we had an optimal trade entry in here. Okay, we're coming back down, we've grabbed some daily lows. Now this looks like a liquidity grab, so we could come back down, hit some of these new weekly lows, which could be in the overall market direction. But when looking at what liquidities we have grabbed, we've grabbed weekly lows, grabbed weekly highs, grabbed some lows again, daily lows, and what's next? My assumption might be we'll come back up and grab some weekly highs. And what's happened, we've also created some higher highs in here, although we did create that before the liquidity grab, but these higher highs are a signal of the market wanting to go towards buy side liquidity. So that is the bias, I guess, for today, or the next couple of sessions, is that we will gravitate towards buy side liquidity. Now moving down to a 15-minute. So after I saw this liquidity grab happen, I thought let's go in for an optimal trade entry. Now there's a couple optimal trade entries that we could take. I've also got a limit order down here if I were to do this, because we did grab these lows here. So I could use this as an optimal trade entry. We came here, come up to this level, and if we retrace back down into this, or if I use this here, yeah, if we retrace back down into this level here, actually this would be an optimal trade entry, but I've got my buy limit here because we use more than one method to analyze charts. We have a breaker, we have an order block here. So the order block vaguely aligns with the optimal trade entry, but my assumption might be that this order block would stop us from, would be sufficient to get us into a trade, and it's close enough aligned. You know, if this wick was a little bit shorter, then it's probably perfectly aligned. But I did want to take another trade opportunity up here. So we had retraced up, we come down, created a low, created a high, and based on the previous analysis that we are going higher from everything else that we've spoken about, buy side liquidity being taken, and closer buy side liquidity than sell side liquidity. You know, we've got a weekly low all the way down here, an untouched weekly low down here, but the weekly high is a lot closer. So the chances of gravitating towards weekly highs seem a lot more possible. We've got a low here, a high here. I've set my optimal trade entry to this zone here. Okay, and so this is where my limit order was. As we can see, we touched into it, we almost hit my stop loss because the stop loss is under the low here, and then we bounced back up. So I'm looking to ride this trade up until this red point. Okay, that's how we use optimal trade entries. Yep, I will be taking a 50% partial up here, a 50% partial, another 50% partial here, and then fully out of the trade here. Now, technically I'm supposed to take a 50% partial in this zone, but I just think that if we are going to move up, it'll be a better trade to take up here, and I'm just willing to take that risk. But generally you should take the first 50% here, another 50%, another 50%, just keep halving it until you get to the top. You can take the whole trade off. So by the time you get up here, you shouldn't have much on anyway. Most of it should be taken off in these first two brackets, and that's just risk management there. And as you do that, you move your stop loss up. So that's this trade. This could take a while to play out, so there's nothing much more to talk about on this. I just want to document it so that we can review it again as journaling, and perhaps collate it with the end result, which I'll also do a recording of as well. Okay, talk soon. I just want to add into this trade, it's coming back into me a little, into negative a little bit, but I just want to add some other pickups of the reason that I got into the trade. If we have a look at the hour, yes. So when we did grab these weekly lows, we had wicked down into this order block area. And why is this important? Because over here we had come down and we had grabbed previous weekly lows here. Let me just get rid of that big long candle. That should only go out there. We had wicked down into these previous lows, okay, and as I stated before, we could have, because we had liquidity grabbed here, and we were creating higher highs, higher high, higher high, higher high, higher high, okay, and higher lows. We could have used an optimal trade entry here to get into a trade going up. So this created an upwards market, an upwards trend. So this here could be considered a bullish order block. And had we retraced back into this bullish order block? No. There's 3 down candles followed by a quick retracement up, and this is followed by a large push up all the way to buy side liquidity. So we came down here and we tapped into that, and as you can see, we didn't even hit the middle point. And as we know, when you get an order block, the way to tell if it's a good order block is that price retraces into it and doesn't hit the middle point before wicking back out. Oftentimes, price will just wick straight into the first 50% of it and then immediately come back up. These are great zones if you can find them to put a limit order in right above them and the stopper below. So we did that, as well as liquidity grabbing daily lows. This gives me confidence that we have a good reason to believe price will come up and grab some buy side liquidity, and it could be this daily buy side liquidity, could be this weekly buy side liquidity. I am not sure. But another pickup that I want to add to this right now is that we do look like we have some equal lows here, relatively equal lows. So before heading up, what may happen, I did take an optimal trade entry here, right about here. Okay, what may happen is that we come down and actually have a liquidity grab here before going back up. So I could get stopped out of this trade before price. Hold on a sec. Could get stopped out of this trade before price does something like this, grabs, comes back up. Okay, and then what might happen is it might come back into an optimal trade entry and off it goes. Right, something like this. So I could be potentially looking at another optimal trade entry. If I do get stopped out here, I would need to see a liquidity grab to know that the push towards buy side liquidity is the direction that we are going in. At the moment, that's my thesis. If we don't liquidity grab here, you know, we could end up heading down towards daily lows or some sell side liquidity. So let's see how it plays out. Let's see. I mean, just based on the fact that, you know, we created equal lows here and we didn't respect this optimal trade entry, does tell me that the optimal trade entry, that this was not a good optimal trade entry place. Generally, you know, you want to be finding an optimal trade entry that, you know, where price is on the way up. At the moment, we look like we're consolidating and looking for. Hold up a sec. At the moment, we look like we're looking for some liquidity, some buying pressure to push the price back up. It doesn't look like price is already on the way there. That's where optimal trade entry shines. You know, when we can look at some examples over here when price was, you know, ready to head down. Although here, I guess it did, you know, pretty much almost make a double top. But just looking at this price action, it doesn't look like it was a good optimal trade entry. I'll just say that. But I'm going to stick the trade out. But very strong possibility, looking at how this is playing out, that we might get a liquidity grab here, and then back up it goes. So I'm going to have to keep an eye out for some more optimal trade entries, and maybe get some confluence with order blocks, maybe some fair value gaps to increase confidence in the direction. For example, if we get a liquidity grab in an order block in this upside direction, and it overlaps with an optimal trade entry, and then straight after that we can see the a buy side imbalance in price action, a fair value gap upwards, that would give us confidence that we are going to move to the upside, that buy side pressure is happening. So we haven't had that in this optimal trade entry, and realistically looking at it, I mean, we could consider this zone here an order block, but the fact that we didn't respect it doesn't give me a whole lot of confidence, and I can't see any order block or fair value gap that this has wicked into except a relatively equal low. So that makes me think that this is not creating, this wick here hasn't itself created pressure to the upside, and that we'd be looking for some liquidity grab to create that pressure. But I have to stick the trade out. I could risk manage it here, but I think it's worth just holding on to. If we lose, we lose. We can always find a new trade. It looks like we're making some big moves up, but this could be just some manipulation to the upside. So we'll see. If we create a big wick down, that's not probably going to be optimal for the trade that we have on, because we have this zone here, which could be considered an order block. Not the best level for an order block, but if we wick up into that, we're getting some pretty heavy price action right now. It looks like manipulation, and if we do wick up into that and see it quickly retrace, then we could be looking at more downside price action. Let me just see what else I can spot here. So we've got highs, lower highs, lower highs, lower highs. We've got this and then a higher high, but lower highs, lower highs, lower highs. Okay. Lows, lower lows. I mean, looking at it, the trend does look downwards if we were going to be heading for weekly lows, but we did grab weekly lows. Are these weekly lows or daily lows? Let me have a look. Weekly lows. We grabbed daily lows. Daily lows. Right. That is a daily low. So let's just head back down to 15 minutes. Yeah. No, that's that. We grabbed daily lows, so we could be heading towards weekly lows, but based on this liquidity grab, as I stated before, I'm going to have to play the probability that we are heading up for some daily highs now. So I'm going to use this entry here, but we could see a liquidity grab before heading back to the upside. So I'm happy to take this loss. Again, I've still got my buy limit down here. If we do head down to this order block area, I will be a buyer. What else do we have? Any imbalances that we might be trying to move up into? We do have an order block here, to be honest. But again, all of our bias is to the upside right now, except on the possibility that we come down and grab some daily lows. The overall trend is heading upwards, right? Higher low, low, higher low, higher low. It's just this intermediate trend that's heading down. So look. So we're going to let this trade play out. I'm just going to let it run. I'm still going to use my optimal trade entry take profit zones. Once again, those take profit zones will be, I'm going to do a 50% here just because of the uncertainty. So 50% here, another 50, another 50, 100% up the top, and I'm going to move my stop loss up each time. So I'm going to let it run for now and check back in later, and we'll see how it's going. So to update on the trade, it looks like we have come back down to this relatively equal low area. The one thing that's making me not so sure about where we're positioned at right now in this is that we're not in any area of you could say resistance. We're not in any fair value gap or clear breaker block. I mean, we do have this breaker block area here, but it makes me concerned because we're dipping below that so much. So I'm not taking this breaker block area as seriously. I mean, we're only wicking under it, but this is not what we usually see in breaker blocks. I mean order blocks. So I'm not wanting to consider this as an order block area because of how we're reacting. I mean, I guess here we did react out of it. That's a good point. But I mean, as stated before, it's looking like we're coming down to stop out and maybe do a liquidity grab because we have relatively equal lows. This would be an area of liquidity, right? So I mean, liquidity pool, okay, get rid of that middle line. This is a liquidity pool because of these relatively equal lows. So I'm not going to move my stop loss. That's a really bad habit to get into, but it's looking like we're going to get stopped out. It's getting really close, and then we're going to catch up after this once we see what the market does in this area, and see if we can get a liquidity grab and a movement back up. But this trade looks like it was an unsuccessful trade for the moment. So let's just sit and watch if we can capture the close. Here we go. I mean, the unlikely other option is that we would double touch this line, but I mean, we don't want to trade off support and resistance, right? That would be a support line. We don't want to trade off that. We want to be trading off liquidity areas and areas of high trade volume, breaker blocks, order blocks, fair value gaps. We want to be trading off that, not off support and resistance. So, and plus, the likelihood of a liquidity grab is quite high. So, but I mean, we're going to hold the trade. We're not going to move the stop loss. One thing we could have done differently is maybe once we saw this come down and touch all the way into here, we could have risk managed, and we saw it wasn't immediately bouncing back up. So that's maybe one area where we could constructively take that in consideration. I mean, it would be better to close at a profit than to take a loss. I mean, even if it did come back and we did give up that, you know, did give up a successful trade. Once we realize that it's not behaving like we want it to, well, what we want is, if we want it to come down into the optimal trade entry and then bounce up and keep going up. I mean, that's how we know we've got momentum on our side. What we got is it coming down and making a double bottom, which is not a part of what should happen. And we didn't, and we could have kept in the trade if we saw momentum moving straight to the upside, but because we didn't see that, we could have closed out of this trade earlier. But I mean, sometimes you just have to sit in a trade and let it ride out. I mean, that's the only way you learn, and that's what we chose to do. But it's it is good to note that there are signs to look for that the trade is playing out as expected, and to watch for those signs. And it's not a bad idea, and to close out if you're not seeing the signs that it is working in your favor. Because for this kind of trade to work, a liquidity grab, then an optimal trade entry, this setup, this setup that we take is a setup that is supposed to capitalize or get a good entry in on a reverse move up. Okay, on a liquidity grab and a move up. And if we're not getting that that immediate move up, or that quick move up, it's a sign that we're not on the right side of the market, that the market's not, that we were wrong about our initial analysis. So we need to be watching what price does even after we get into that trade. But if we're not sure, it's fine to just hold. We risk manage with the position sizing, so it is completely fine if we're going to take a loss and just call that a loss. It's a trade that we lost out on. And that's what we decided to do here. I thought, we're going to give this a chance to work. If we lose it, we lose it. If we don't lose it, then great. But it's good to note that if it's not immediately working in your favor, it's fine, and the market still gives you an opportunity to get out at a profit. It's fine to take those signals that it's not working and take your profit. So that's something that we could do into future, because there will be other entries. We don't need to win on every single trade, and if we think that this trade isn't working out like we want it to, then we can turn what would have been a loss into a risk managed profit, or a small loss, or a break even. That's completely fine. And if we were wrong about that, if it did end up working, it's okay. We didn't lose money, and that's the main point, is that we decided to risk manage a trade that we thought could have lost us money, and we didn't. But that's just something to keep in the back of the head. In reality, I do want to be trying to get into trades that are good. I don't want to be trying to just pick every trade that I see and then risk manage as soon as it gives me a profit, because I'm not sure. That makes a lot of back and forth. So my main goal is to try to pick the ones that are the higher probability and then ride them out all the way. And that's what I did this but it's fine to note that as well, that be open to closing it if I really think that it's not going to work in my favor. But again, I'm still going to hold this until it closes. What we've got here, looking at it, we've got a bunch of down candles, and we've got this engulfing candle up, and this other move up here. And if we don't have a retracement down, if we close up, we could consider this a fair value, not a fair value, an order block. Alrighty. I need to save this, actually. I need to save this liquidity. It's a border. I'll get this nice and thin. This is a liquidity pool. Template. Save as liquidity zone. Save as order block zone, and the other one is a fair value gap. Let's start this. Value gap zone. Yeah, we've definitely got relatively equal lows now. let's move to a higher time frame. I've just been watching this on the 3-minute. We've definitely got relatively equal lows now, and especially if that bounces up. And so this is just not what we want to see on an optimal trade entry. I mean, we don't want to be, you know, retracing back into this. We don't want to be retracing back into this zone and then just hovering under it. I mean, that's not what the optimal trade entry is meant for. That's not how it's meant to work. So we know that we were wrong in assuming what was going to happen. And so what did we have? We had this liquidity grab, you know, and we might have this higher time frame optimal trade entry. I mean, is very possible. So we'll see what happens. But this was not the setup for an optimal trade entry. Essentially what I was looking for is, I was just looking for some lows that I could base the optimal trade entry off, with the overall bias that we were going to grab some buy side liquidity. I was just looking for any setup that would give us that optimal trade entry. I mean, look at this though. Look at this steady move downwards with these engulfing candles, right? I mean, could this be interpreted as either buy side pressure or kind of an algorithmic liquidity grab to, you know, take out some stops, some sell stops, some buy stops, and continue the price move down? You know, if we have people trailing their stop loss, take those stops out, continue the move down. Not 100% sure on that, but essentially what we want to see to confirm the market direction movement is the highs and the lows, and what the highs and the lows are doing. So we've got high, we got a high here, a higher low, higher low, but this here is what I was looking at. We hit the low, higher low. Okay, then we had a we had a low here, which was a higher low. Okay, from all of this, even from here, it's a higher low. Then we had a lower high and then a higher high. So we had a higher low and a higher high. This kind of upwards direction signaled that we may be looking towards buy side liquidity, because that's what we want to see. We want to see markets grabbing highs. If markets keep grabbing highs, then they're reaching towards buy side liquidity, right? One step at a time, right? Each high at a time, right? Here, taps into that high, comes back down. Taps into that high, comes back down. Taps into that high. This is a kind of run on highs. The market gets into a habit of running on highs, and as it's doing that, it's accumulating sells. The market makers are accumulating sells as they keep running these highs. They keep running the highs, letting the market move higher, run the highs. At a certain point, they've accumulated enough sells that they can put those to the market. They've accumulated enough of these buys, sorry, to they've accumulated enough of the, let's say, the currency pair to put those back onto the market and create sells. That puts it down, but that pulls the price down. But I mean, this is just such a clean liquidity zone here. I mean, this optimal trade entry, it really wasn't. I don't want to be negative, but I don't think I couldn't have been more wrong on this optimal trade entry. It looked like a good setup, but I mean, you're going to have ones that you lose on, so that's just how it is. But watching how this has played out, it's just created the cleanest triple bottom here, and I mean, this is an area that's that if there's going to be a liquidity grab, this could be the area that sends it up, but we're going to have to wait to see what happens first. But I'm almost certain that this stop loss is going to get hit, and this is going to be a loss. So looks like we're consolidating. This is a 5-minute chart, so we could consolidate for a while. So I'm going to leave it here for the moment, and we'll check back in once more candles have printed, and we'll see what the chart has done. Has it liquidity grabbed? Has it moved back up? Has it just blasted through this liquidity pool, and we're actually going to be heading for some sell side liquidity, or head for an optimal trade entry here after this sell side liquidity had already been grabbed. We might head for this this order block down here. So I'm going to leave this on here. This is a smaller trade, so I'm going to leave that on. It's got quite a wide stop loss, so if we get stopped out of that as well, that's just how some days go. So I'll leave it there. We'll check back in once more candles are printed, and we'll see what we have. Just want to touch in on an update shortly after, not long later from the last little clip. We've had a pullback, and I'm still in the trade, and I've just moved down to the 3-minute. And one thing that I want to highlight is this trend line here, and I don't particularly trade on trend lines, but I do know a strategy from a trader that's quite good. Her name's Tori Trade. She uses touch point trend lines, and we have a similar setup to what she uses here, and it's a 3-touch trend line, 2 3-touch trend lines. Obviously this makes like a triangle pattern, but essentially our original trade is almost playing into this, and you can see we've had a touch into this order block area, but we've broken this upwards trend line. And what this strategy would do is buy on this breakout, which is basically where we bought over here anyway, over here, and then put our stop loss underneath this low. So let's watch how this plays out. This could be the start of a rally, and now this is not an ITC strategy, but this strategy can work quite well. I have back tested it quite a bit. It's just you don't get a whole lot of setups in this, and it does ignore a lot of ITC kind of information. But what we've gotten here is a fair value gap up, which is essentially another name for that. Essentially, is a buy side imbalance, and that's indicating that there is strong buying pressure in the market right now. Now we could have, it's only a small imbalance, we could have a retracement back into this, but essentially we don't want to see that. We want to see this fair value gap stay open, and that indicates to us that there is a strong buy side imbalance, and that will create pressure moving up. So we're going to stay in this trade. I mean, I know that the entry requirements are not the same as when we originally, or the trade thesis is not the same as when we originally got into it, but we've risk managed with the position sizing, so we can afford to let this play out. If we lose, we lose. If not, then we can scale out at a profit. So we're going to, let's see if we can actually just, yeah. Yeah, we'll do our standard scaling out methods with a 50% takeoff up here, and at that point we'll move the stop loss to this 0.5 level, which will be in profit level. And then even if after that partial take profit the trade doesn't work, we've turned this trade into a win. But yeah, we're still just going to hold and just watch to see how it plays out. But it's created this pattern here that honestly doesn't happen too much. This pattern is, but it's just such a clean setup for this type of trading. And let's just see how this plays out. Essentially, we'd be expecting this to start running now after creating this pattern. That's that's what, and a lot of people are saying this is a triangle breakout, and it could fake out, but and that's true. But let's just let's watch it from here. I'm going to let it run and check in a bit later. Obviously, again, trading is a probability game, so you can't say for definite sure that you can win on every single trade. You just need to play the odds and try to increase your probabilities and risk manage at the same time. I'm just going to move this here. This is actually a clearer order block. So if we do get a retracement, we may get a retracement back into this level. I could actually, what Tori Trades would do is set her stop loss under here, not under the broken trend line. And what often happens is it'll break and then it'll come back, but it won't touch under this support trend line, which is what she has, which is what the opposing trend line, which you could call a support trend line or opposing trend line. It won't break under that. So that's essentially a safe place to put your stop loss. And if it does break under that, the trade, the setup wasn't going to work anyway. So it could still be within the strategy for price to come back in, touch into this order block, and then move back up. And a lot of people trade using different strategies, and that's fine, and they all work if you use them correctly. And so it's really interesting to see multiple different strategies overlapping, such as this. ITC wouldn't use this to trade with, but we have a setup in an ITC fashion. We don't have a liquidity grab here like we were expecting, but we might have this order block that we touch into and take off from there. So it's just about using a confluence of different strategies, and it's really interesting to see them overlap on occasion. But I'm trying to simplify my trading as much as possible into just one style of trading, and I think ITC is one of the more comprehensive ways of viewing price action. But it's all a learning journey, and there's still a lot of setbacks. So we're going to watch this for now, and we'll check in after some more candles are printed and see where we're at. Okay, just checking in quickly with this. I didn't get a chance to take partials right here. We're going to just watch to see how we go. It's going to take a partial. It's going to be a 0.25. Alright, I'm a bit late on this partial, but that is okay. Let's get this Fibonacci back up. Alright. Okay. So we've taken a partial now. Really good exercise to get used to taking partials. Because, and then what I'm going to do, I'm moving my stop loss here, because you just don't know if it's going to reverse on you. This could be a liquidity grab right now. We could be in a 5-minute liquidity grab. We don't know. I mean, we have got this basically a triple bottom down here. This is a perfect area for a liquidity pool for stop runs to happen. So we could come straight back down into here. We need to be grabbing partials no matter what the trade is that you're doing. Grab partials. I like this Fibonacci kind of retracement. Just to say something about this Fibonacci, there's nothing magical about Fibonacci. It's not like algorithms are using this to get in and out of price. This is just to get a good perspective on price. It's not that these levels are magic levels, or that the market is particularly looking at these levels. These are just good practice levels to use. All right, so if you want to be taking partials as the price goes up, this just gives you a good framework to kind of base your trades off. Nothing magical about it. That's why the stop loss is under the low and not under this 79 retracement level, because there's nothing magical about this 79 level. your stop losses on your low, price could retrace anywhere. But generally, when we are moving into an uptrend, you'll find that it'll retrace a certain amount before it continues up. You don't get widening swings where it goes past the low, past the high, past the low again, and forever gets wider. That's not possible. So I use this retracement tool as a way to frame my trades. I don't try to use it as a way to magically predict exactly where price is going to go. It's just good to have that framework where I can say, this is where I'm going to get in. When price comes here, I'm going to take a 50% partial. When price comes here, I'm going to take another 50% partial. And if it gets all the way up here, I'm out completely, and that's it. Having this set of rules, I guess, just helps to maintain consistency, because maintaining consistency in trading is not an easy thing to do. So frameworks where you can make them are very good. Now, I'd just like to restate that from the beginning, I got in to this trade around right here, and as I've stated a few times now, this optimal trade entry didn't actually play out like it was meant to. Most optimal trade entries, when you get in them, they'll come down to this level and they'll continue up it, because that's what happens after a liquidity grab. You're expecting price to start moving the other direction, and this is usually a good point of entry for that. But because we came down all the way and almost got stopped out and then came back up and started slowly retracing back, that's not what we should be expecting from this kind of setup. So I was not correct on the initial setup type, but as I stated many times, we let the trade play out. If we get stopped out, we're risk managed for this kind of trade, for that loss. Okay, and it looks like we got lucky. I would say this is quite a bit of luck that we didn't liquidity grab this pool, and we did a third touch and moved up. Okay, and because not just because we might be likely to come back and grab this liquidity pool, but as I said, it's good practice in general to take partials. So because we've taken partials now, we've turned this potentially bad setup into a profitable trade, and that's essentially what we're aiming to do. Even if we are wrong, we can make wrong trades still profitable. We can make a trade that our analysis was wrong on, and we can still take profits out of that and come out on top. And this is what exactly happened here. So yeah, we were wrong about the initial assumption. We held on, and we used the correct levels to take partials out, move stop losses to, and we're going to continue riding this, see if it continues going up. It may do. We may head for this New York AM highs. This is it's very possible that we come in, we try to grab this level. That might be the buy side liquidity we're aiming for, or we could be coming up to get those daily highs. There may be some more entry levels that we can hit. If there's another liquidity grab such as here, we might look for another optimal trade entry and hopefully get a proper optimal trade entry where it will liquidity grab, come up, make a low, make a higher high, and come into our retracement level, and then move up from there. So because we've got time, and we'll watch what's happening on this chart, we'll annotate what we might be expecting if we do come back in liquidity grab. And look, we're about to hit this stop loss as well. So this is just risk management at its finest. Not its finest, but risk management at work. And this is really how we want to be trading. I mean, we don't know. You can never know for certain what's going to happen. You need to play the odds, take money where you can, and just have a framework for trading that lets you do that. So what we might be expecting is for price to come down, liquidity grab, come back up, okay, make a low, come back up again, optimal trade entry here, and that's where we go. Okay, so we liquidity grab, and we want to see a wick. We want to see it liquidity grab, a wick, or a pull down, a sharp pull back up. We want to feel like liquidity is actually being taken, that there was a run on stops, that a bunch of stop losses just got hit, and that's kind of our signal that we're our thesis is correct here. Although you don't know what's going to happen. When I first entered this trade, I wasn't expecting triple low to happen here. The framework, not the framework, the thesis and the chart started telling a different story. So you never know what's going to happen. But this is essentially what I'd be looking to the setup that I'd be looking for from these levels that are appearing here. So what happens? You come down, liquidity grab, come up, and then we make another low. Then we make a higher high to show that we're reaching for buy side liquidity, and from there we want to buy when after this higher high we want to get an optimal trade entry. We want to get the market has shown that it's liquidity grabbed and it's making higher highs, and then we want to find somewhere to enter in, and we enter on a pullback, and this is just a nice framework to find a pullback. Okay, the 62 level, oftentimes it'll go below that, but 62 level is a good area to get this pullback. A lot of pullbacks in uptrends will hit into this area. So we get in here, the stop loss would be below this low, and again we would target our full TP all the way up here, taking partials along the way. And that's what we'd be looking for. And we're going to risk 1%. This is a 1% trade. The idea is to, even 1%, if you're losing more than you're winning, maybe 1% is too high. We're going to be risking 1%. We're trying to win more than we lose. Because we take partials, the risk reward is not 50-50. I'd have to actually calculate it, but it's not as big as it looks here. This looks like a 6.5 risk reward. Because we take partials along the way, the risk reward is just under 3. It's probably about 3, or if we make it all the way to the top. But a lot of the time we don't make it all the way to the top. We take a 50% loss, a 50% profit, and then we come down and touch here. In that case, it may only be a 1-to-1 or less than a 1-to-1 risk reward, but it increases the probability that we actually make money. So it reduces the percentage of losses, and it increases our win rate by doing this. But it may decrease our risk reward at the same time, especially if we're getting a lot of 50% and then getting stopped out. We may have quite a substantially lower risk reward, but the idea is that we're picking good entries that will increase our hit rate, essentially, the amount of times that we're correct, and then we can have a lower risk reward if we're correct more often. At least 50% of the time. If we're correct 50% of the time and we're getting more than a 1-to-1 risk reward on average, we're profitable. So this is what we're going to watch for. I'm going to just get rid of that. We keep that in our mind. We don't need to have everything annotated on the chart all the time. Just keep that in the back of our head that we are potentially looking for that play, but at the same time we have got a trade on, and we're going to watch for the exit criteria on our existing trade as well. So I'm going to just leave it for a bit, let some more candles print, and may come back to show you the other take profits, but essentially when we get to here, I'm going to half the what we've got, so I'm going to take another 12.12 contracts off, and then when we get here I'll take another 6 off, and then when we get up here I'll close the whole trade. And if we don't get all the way up here and we come down and get stopped out, then that's the trade, that's the rules that we trade by. And when we turned a potential loss, or what we thought was going to be a loss, into a successful trade. And then we'll be watching for this new area down here to be liquidity grabbed, and maybe we might be able to get a scalp down into that area, but the higher probability, the more rule-based systematic setup would be the one that I annotated earlier. Another way of trading is we can buy or sell into liquidity pools when we think that it's a high probability. For instance, we've got 3 touches here. It's high probability this may get taken, and if we think it's coming back down into it, we could do like a tight stop loss trade, trying to make money into that, capture a movement into that liquidity zone. But it's a little bit less systematic. So yeah, we'll see what happens. But I'll come back when we're doing, if we do something like that, and just after some more candles print, and we'll see where we're at. And so yep, I'll check in a bit later. Just touching back in with how this is going. Last time when I took partial profits off, we were at almost the sum we're at now. I think we took, I forget how much we took off, but it's just interesting to see how we can take partial profits, and then as it moves, that number will just go back up, ready to take partials again. So, I mean, this is why we trade like this. It creates a lot more safety. But pretty insane to look at how close I was at getting stopped out once again. My stop originally was right under here, and then I moved my stop to this 50% level. And it's just, well, I didn't end up taking partials up here, but until I take my next partial, I'm not going to move my stop loss. I could move it up and just let the trade do what it wants, but and I could take the trade off now even, but I mean we've started targeting buy side liquidity. I mean, at this point we want to capture. The market is showing us that it wants to target buy side liquidity, so it's showing us that it wants to move up. So we've got to trust what the market is saying to us, and allow ourselves to capture the move while the market is letting us do it. So I'm going to hold as usual. I'm not going to take the trade off until we take partial profits here. Then I'm going to move my stop loss up. What is the, out of curiosity, we moved down here. What's the difference here? So it's the same. So I mean, this retracement here didn't quite touch that. So if we were to have a similar kind of pullback up, it's really interesting to see how the market moves in retrospect to the ranges that you have mapped out. Here we go. Well, one thing I do notice is that we took this, change this to a white line, we took this high here. Now we are taking buy side liquidity out, we're targeting buy side liquidity, but this could also create enough sellers for us to head down into this pool here, as I've been saying, and grab the liquidity down here. What's the time? We're also about 12 o'clock. 12 o'clock time in Asia session, 12 o'clock. So this is prime time for movements to start happening. In fact, in East Coast Australia, the Asia session starts moving at about, from anywhere from 11 onwards for gold. Let's bring this up. 12. Let's take a 13 off. I'm not going to take it off now since it's pulled back. I'm going to wait till I know we did hit that level, but I think patience is key. I'm going to wait till the market properly moves up there, and then, although that pullback is, we're seeing a lot of ups and downs, and even though that looked like a big pullback, I think what's happening is we're right at the peak time for large volume to start coming into the markets. So it's very possible that we just start seeing a lot bigger movements and a lot bigger ups and downs, especially looking at a 3-minute chart. It goes from being very quiet, as we had here, in the New York PM, doesn't move very much, very quiet, and then we hit the hit the 11 o'clock mark, and volume just starts coming in, and volume stays in all the way until the end of London. It's pretty crazy. Midway through Asia session, all the way till basically the end of New York. To be honest, actually, New York session, volume just stays in gold. I mean, look at this. Right about the 10:30 to 11 o'clock mark, we had this volume pullback, and then we had this big push all the way down, and then all of this volume all the way into New York. And then as soon as New York closed out, New York AM session closed out, we were just quiet all the way until now. So and that's another thing about this trade that I took. Actually, looking back, I took this right at the start of the Asia session. Like, this is the opening candle. Of course, the opening candle is going to be volatile, but also this is just not a time frame right here where there is a lot of volume in the market. And when there's not a lot of volume in the market, price is not going to be going where it's favorable for the big banks that move these prices. And when we're putting our charts on the table, when we're putting our optimal trade entries down, I'm going to close that, we're really looking at where are the big players getting in, where are they moving the price to get that optimal trade entry. And we want to get in with that. And if they're not in the market with this volume, then you're not going to be seeing these optimal trade entries. Or if you do see them, they're not going to be accurate because the players that are making them are just not playing right now. So let's have a look. Put this. Yeah. Anyway. So that's a lesson that we could just close that we could pull out from this trade, is that we really should be waiting until essentially what we could have done is waited until this liquidity was grabbed and then taken an optimal trade entry. Or what we could do here, now that this high was grabbed, is we could take an optimal trade entry back into this liquidity pool. Very, very, something we could look at, but we would, again, we would need a lower low to be created for us to know that that's going to happen, and there's really just not enough range for any of that to happen. So I don't think that's what we're going to be doing. We managed to risk manage this trade into a profit. That's not always the case, and you know, in hindsight, if we were focusing on this high volatility time period, we would have never had this trade. So it's really good to just, even with your wins, have a good perspective on, you know, what you should and shouldn't do. Just because you made money on a trade doesn't mean you were being sensible, or making, you know, you could easily just get lucky. So it doesn't mean because you lost money on a trade that you were doing the wrong thing. You know, if it's according to your strategy and you've back tested it, and you know it makes money, you know the strategy works, you need to stick with it even when it doesn't work. But if you're not following it and you do make money, you need to be able to recognize that, because guarantee you the next time you do it, if you're not following it, you do something like this again, it's going to burn you, and you're going to think, well, I made money last time, don't understand why it didn't work. So be rational in your wins and losses. Again, we did have a different type of setup, later on form, where this trend line got broken. And as I said, that what we usually want to see when that happens is we want to have our stop loss under an opposing trend line, and we want to have that run upwards straight away. And so that was a different trade that formed. It just so happened that my original trade overlapped directly with that, but we could have taken that trade. That would have been the exact same trade if I had taken that. The exact same trade as the one that I took if I had taken that a bit later. So that's something that we definitely could have done. And then what we could do is we could just still draw this retracement line on the highs and lows and use that as a framework for where to scale out of, because we still need a framework for where to scale out of. We can't just be guessworking levels. Not that these levels are, you kind of could. You could say, oh, well, this high I'll take 50, at this high I'll take another 50, right? But I think it's a good idea to have a framework that you work around. Now, what are we doing here? Let's move down to the 1 minute. Let's have a look at what's going on. So we could say that there's an order block here, but it's probably more likely, I think, that this area down here could be an order block to be tapped. Let's order block zone to be tapped. Alright. And you see how we did tap that? See that? See, this is how we want to expect order blocks to work, or how we'd be using order blocks, is we want to see an order block like that, and it gets just touched up until the midway point. You know that that's a good order block. I mean, it's really hard to pick that at the time, but these often happen after liquidity grabs. I can find some examples. Where is a liquidity grab? You could say something like this comes up, and you'd be targeting your order block somewhere here. Now this didn't get hit, but this would be something that you would say, okay, well, we're creating higher highs, order block zone, and what price might do is just wick straight onto the order block. But we'll save that for another video. Let's move back to this 3 minute. Let's just get rid like that. Just keep it simple, keep the original levels on the chart. See this kind of price action here. These wicks downwards, these wicks down, multiple of them. That does look to me. I mean, I do like to see them into some sort of zone of high volume, like an order block or fair value gap. But which I can't see. I mean, you could say this is an order block, but I don't think that's an order block. There's no engulfment. There's no high volume coming out of it. Right down here, this could be an order block. But these wicks do kind of signal that the market wants to come up. I don't know if I could take a trade off them. They look very liquidity grab type, but candles like this can be deceiving as well. So we really need to be trusting our levels, trusting the liquidity zones that we can see, looking for this kind of price action in those areas, not just randomly on a chart, because this can be a trick. ITC states that he loves to see these candles form, making people think price is going up, and then these candles to be taken, and people will have their stops under this, because this kind of price action creates liquidity pools, because people have an inbuilt sentiment that this means price is going up, and that just means that the market is going to create a run on that level, on those zones. So here we go. So I've taken another partial. And this is what I mean. When price is showing you that it's just wanting to take out buy side liquidity over and over again, you want to be holding on to that. You want to take out your profits at your key levels, take your partials, but and then move your stop loss up. But we want to be letting these trades play out, because if the market's just going to keep running, then you've got an opportunity to capture that move. And even if, like we originally did, even if we were wrong on our original trade thesis, by holding out and by following this plan, we've turned it into quite a profitable end result. So all right, so we've got two partial take profits now, and our stop losses under here. We'll just hold it on for the moment, just see if it does in fact take out our stop loss. Otherwise, we'll just leave it and let more candles print and come back to it. I got a feeling it will, just because this range here, this seems to be the current range that we're in. Let's change the color. I mean, yeah. So I mean, I would say it's not unlikely, and our stop loss is up. It's not unlikely that price might, even if it does continue going up, it might get close to the bottom of these candles before it goes up and takes another high, and our stop loss will definitely get hit if that does happen. Put this range overlay. Yeah. One thing I like about the 50% level is that when you get retracements, that 50% level is extremely easy to get hit. I mean, so you're taking a partial and moving your stop loss into a profitable zone. I mean, it's very, very easy for a 50% retracement to get hit. Here we go. And even though we're taking half off the table, like if I had held that entire trade, we would have made a lot more. But that's not You know, we can't be getting greedy. That's not the goal here. The goal is to lower risk, increase our odds of making money, and make money more often than we lose money. And again, this is just this trade has captured a really good example of being wrong, but still being able to make money. I was wrong on my original assessment. The candles ended up printing out a new type of setup for us to that validated the original trade that we got into. But you know, this in all reality should have stopped us out, and that's fine because that'll happen. But by taking partials, we were able to make sure that even though we were wrong on the original thesis, we now turned it into a winning trade. Actually, we weren't too wrong on the original thesis because it is still going up in our favor. But that is the essence of taking partials, is that if you are wrong, you still capture a profit. Look at this, just missed my stop loss again, and off we go. And so we got the full take profit up here, but by that point I will not have much on. I mean, that last gap there is quite a gap, and I doubt that will. I don't know. I can't see us getting all the way up there, but I mean we might do. That's quite a big range. We might just get an explosion like we've got here, make it all the way up there, but I mean that is the daily highs up here. So if we do head for that, that will get hit, but yeah, that might happen in London session. So this trade might be going for a little while. So for the moment, I'll leave this chart to continue printing out, and we'll check back in to see where it is in a little bit, to see if we get stopped out. Maybe I'll see if I can capture the stop loss getting hit, or if we get to our new take profit target, and we'll see if we can capture that. Alright, so another update on this. We haven't hit our stop loss yet. We're moving up to the next target, take profit target. We're going to half the position size again. I've just got it up here already. We don't want to do this early. We want to be. There's no point in trying to get in early or take profits early, and stick to your strategy and wait to the targets to get hit. Wait for your levels to get hit. That goes for entries as well. I mean, I do have my entries a little bit above my take profit. My the optimal trader entry line, the first one, and that's purely just because of spread. I don't want the spread to stop me from getting in when the chart actually hits this level. So I put it above just to account for that spread, because essentially I want to buy into. I don't just want my buy entry to be on that trade. I want to be buying in when the chart hits that trade. So I'm happy to have an offset on spread on that, as long as I'm in the trade when the chart hits those levels, because those levels, the chart hitting those levels is what's important, not that my trade is actually on those levels. So I take the same approach when getting out as well. I wait for it to hit my level. If it hits my stop loss, no worries. But I want to see those levels hit. It's just it's nothing special, nothing magic about the levels in itself. It's just good practice to be patient, good practice to not get hung up on the outcome too much, on getting out, getting in, to let the process play out. It's very easy to get FOMO or just impatient, or just scratchy fingers and you want to do something. But most of the time that makes you lose money if you're playing into those feelings. So we're going to wait for these levels to be hit. I'm going to half the position size again, move the stop loss up, and at this point we're at a New York AM high, and you know, on my chart you can see the AM and the PM session. The AM is really where everything is. The PM is more or less aftermarket. So yeah, the AM high are the highs we focus on here. So I mean, we're approaching that, so we might, you know, we might respect the level. We might liquidity grab it and head straight back down. But again, if we liquidity grab this level, I'll have taken half off. I'll have moved my stop loss up. I'm okay for it to come down, hit my stop loss. That's good a trade as you can ask for if that happens. You know, to make it from all the way down here to all the way up here, with some partials, and then stopped out at this level. Perfect. You know, if it takes this and then keeps heading up, might take profits a little bit early, but that's fine. That's not a problem. You know, but by this point, there's really not much left on the trade, so I'm happy just to get out at that level. So we haven't quite hit it yet. I was thinking that we were going to touch into it on the last candle. We've got this fair value gap here. Let's close that. See this fair value gap here? I think this is just a very small one, but this could be an area for price to bounce into. A lot of the times, fair value gaps are filled. When you get one, they're filled. That means that price comes back into them, and price doesn't always bounce out of them. I mean, a lot of people use fair value gaps as an area of support and resistance. I try not to refer to price action in terms of support and resistance, but in my experience, fair value gaps are almost 50-50, whether it respects or not. Order blocks, if you get order blocks correct, they're a lot more accurate, but they're a lot harder to find as well, the good ones. But the good ones, when they do get hit, they respect insanely well. But fair value gaps are a lot easier to spot, and price kind of does what it wishes with fair value gaps. But they do have importance. They do have meaning. A lot of the time, what happens is when you see a fair value gap, it can be an area where price will bounce off. But more or less, more often than not, price does go back into the fair value gap, and that's really where you really the area where you can see how important they are. When you see a fair value gap, price almost all of the time, almost, not always, especially if the market's got a lot of imbalance onto one side, buy side or sell side imbalance. If the market's pushing up, it's gapping up, and you know, you'll get fair value gaps that will indicate that the market is strong, moving in one direction, and they could be great to see on after liquidity plays. That's an extra confluence to show you that you know, it's a good trade that you're in. But a lot of the time, especially when we're in consolidation, especially you know, even in times where the market is moving up, when we see fair value gaps, it's a good possibility, it's a high probability that the price is going to go back in and fill that, because that's an imbalance. That's an area that's more or less under traded, is what that shows you, and that means that it's likely that price will go back and trade into that area to balance out the spread of price trading. We can see that down here. There was another fair value gap that was created, and what happened? Price came back down into it. It respected. You know, now like I said, it doesn't always respect, but it almost always goes back, trades back into it. Maybe not all the way into it, but often. Right here, another time. So fair value gaps can be used as buy entries. You know, if you are expecting price to continue up in the same direction, if we're expecting this big push. we can use fair value gaps to get an entry. It's just they're a bit lower probability that they will respect that entry. You can still use them. It's just you're not going to be right as often. I've found it difficult to make a strategy around fair value gaps, so I don't use them to enter as much unless I'm really confident. And you see what I mean? Like if we had used this fair value gap to buy from here and put a stop underneath it, we would have been stopped out. So yeah, I don't do that. But if we notice fair value gaps, this is not a strategy that I use a lot, but you can use for trade into fair value gaps, because we know that it is quite high probability that fair value gaps will be traded into. So looking for setups to trade into fair value gaps, especially on the higher time frame, is a good way to get high probability trades. It's a good way to find to figure out a daily bias as well. If you're looking at the daily chart or the 4-hour chart and you see big gaps in price, you can know that at some point price is going to return there. And the difficulty is when will that happen? And that, you could be that can be something that you're wrong on. I've seen fair value gaps form on 4-hour charts and they haven't been filled for days, and that might lead you to a lot of losses trying to trade into the fair value gaps for up until it actually happens. And so yeah, you really should be using the strategy that works for you. But if you see fair value gaps that add to that confidence, they're a good piece of information to have in there as well. Order blocks, once you get good at picking out the correct order blocks, I'm still working on identifying the really good ones. It's easy to be wrong with them because you can pinpoint them everywhere if you're not careful about it. But the good ones, they respect incredibly well. Maybe in another video we'll see if we can get a trade where we have placed a limit order on an order block and that's been filled. Look for an opportunity like that. But it's great when I can get an order block that's in a optimal trade entry that's according to the strategy that I've been outlining in this video, and there's an order block that aligns with that just adds to the probability that it's going to be a good trade. You really just want to overlap these strategies that make your trade a higher probability. When you get overlapping confluences of these trade entries, that's how you know you've probably got a high probability trade on your hands. All right, are we going to hit this next partial? Possible that that what we've done is we've touched this New York high up here, and maybe we don't grab this area, maybe we come back down and hit my stop loss. So for the moment I'm going to let it play out some more, and we'll come back when it's either close to one of these two areas. We'll let this print out some more, and I'll check back in once some more candles have printed. It's possible we're going into a consolidation from here. We have just seen quite a big move up. So yep, we'll leave it for now and we'll check in a bit later. Okay, just another update. Some more candles are printed. It looks like we didn't hit that higher time frame, that New York high. So we didn't hit our, well, we haven't yet hit our next take profit, but we have come down, looking like we might touch onto our stop loss, and that'll be this trade out for the day. So we'll see what happens. Again, as I've been saying, we do have this liquidity pool still down here, so we are still open to move down into this. This might be the move for London session. I mean, we've only been in this for a couple hours now, so London session starts in a few more hours. So what we might end up seeing is a continuation of the Asia session down towards this equal lows and a liquidity pool, and then just before or just at the start of the London session, a grab of the liquidity down here before a large movement. And if that does happen and the movement is to the upside, I'd say that we will get an even bigger move than we got in the Asia session to come and take out these higher highs up here, just like what happened. I don't know if we come back here, we saw this London session just explode. Gold is a really big mover in London session, so it would be looking for some big movement off this level. I'd be looking to the upside, but we never know. Never know what might happen. We might just have a run through this level, but let's see. Here we go, and there we are. That trade lasted. I got in here, so that was a three and a half hour trade. Again, I got in at the start of Asia session, which is not the best time to enter into a trade. I probably would have had a better trade entry getting in on this breakout, which would have been the same trade, but it would have lasted, been a lot quicker. So that would have only been about 1.5 hours. So for now, I'm going to just sit back and see what forms. I'm not rushing into any more trades, but I'm looking at this liquidity low here and this high up here, and I'm essentially, I mean, we might get, if I just move this up here, yeah, we could get a pullback into here, maybe a grab off this high here as a mitigation block, but I'm not going to be taking trades of that. I'm really looking at these lows down here, and if we do get a grab of these, this would be where I'd be looking for my next trade. So until that, I mean, it's been a good day. We turned what we thought was a loss into quite a nice profitable trade. So you know, you can't really ask for more. We're not rushing into trades. That's not what we want to do. I'm just going to sit back. We're going to see what else forms, and that'll be it for this video. But we'll start a new video if we do enter a new trade, and we'll track it like this. I'm just going to do these and upload them as a journal, and that way, you know, I can look back. Other people can learn with me. This is all demo as well. Just so you know, I'm doing this as a practice for my strategy, and hopefully to help other people learn along with me. So for the moment, I hope everyone has a good day, and catch you next time.